Welcome back to Return My Capital. Today we're taking a look at three high-yielding, internationally focused ETFs. We're going to take a look at IDV from iShares, and we'll take a look at DTH from Wisdom Tree, and we'll take a look at VYMI from Vanguard. We'll compare these. We'll look at holdings, the underlying metrics, certainly the dividend metrics. We'll then compare the previous performance against VXUS, and just for fun, we'll throw in VOO, which tracks the S&P 500. Now you see here with IDV from iShares, this is an ETF that is investing primarily in Europe, the Pacific, Asia, and Canada. And this is tracking developed markets. So you will not get exposure to Chinese companies because China, for whatever reason, is still considered a developing market. Now, DTH from Wisdom Tree, it is, certainly tracking ex-US, so international companies, but it also actually does not track Canadian companies as well. So that is a common criticism I have seen for this DTH ETF, is that investors want exposure to Canadian companies. And then VYMI from Vanguard is entirely ex-US as well. VYMI is tracking developed markets as well. So for IDV here, you see over the past year, it is up 13.2% over the past 5 years, 38% over the past decade, down 9.5%. Currently trading for 32.50, right at the top of its 52-week range, 32.90, the bottom end of that range, just about 27. A 0.49% expense ratio, so certainly more elevated than you would get from a broadly diversified total US market or a total international market like a VXUS from Vanguard. But for this ETF that is focused on international high dividend yielding companies, you're going to pay a 0.49% expense ratio from IDV, which if you're not familiar, if you're not familiar with iShares, that is via BlackRock. So certainly you've heard of BlackRock. Quarterly distribution frequency and a 5.24% yield on that dividend distribution for IDV here. Almost $5 billion in assets under management, so highly liquid. You see over the total return, certainly is lagging the S&P 500. US has obviously outperformed to a great degree for the past 10 years, but you do see the relative underperformance for IDV here from iShares. From a total return perspective, IDV is coming in at, let's say, 22% over the past year. So beating the S&P 500 on the 1 year, 22-10. Now, IDV on the 3 year is 33.5% compared to 42% for the S&P 500. On the 5 year, IDV is 93 compared to 112.5 for the S&P 500. And then that 10-year total performance coming in at 68% for IDV compared to 222%. Not really a fair comparison. We'll compare all of these against VXUS, which is the Vanguard Total International. So can't really compare an international dividend-focused ETF against the S&P 500. You're comparing apples to oranges. And if you're investing in these products, certainly you're doing so with different goals in mind. Now, from a sector holding breakdown perspective for IDV here, you see that there are 147 total holdings. Of those holdings, 30% are financials, 15% are utilities, 11% in communication, 10% in consumer cyclical, 10% in energy, 8% in materials, 7% in consumer defensive or staples, almost 5% in industrials, 3% in real estate, and just under 1% in technology. You'll notice a trend here as we go through all three of these. The reason that the US market has outperformed to the degree it has over the past decade compared to international is because of the tech outperformance. The mega cap tech in the US has driven by and far the majority of the returns for essentially the entire world's stock market performance. Now, that being said, the top 10 holdings for IDV here, you've got British American Tobacco at 4%, Total Energies 3.3%, Enel SPA at 3%, BHP Group 2.8%, National Grid 2.8%. Obviously, utility. Let me know if that's out of the UK. Rio Tinto, 2.6%. I think that's out of Brazil. Mercedes Benz, 2.5%. Vodafone, 2.1%. I think that's the largest telecom throughout Europe. I think that's essentially the Verizon and AT&T of Europe. Let me know if I'm wrong on that. We've got ENI, SPA, not familiar, 2.1%, Volkswagen, 2%. So top 10 holdings make up 27.5%. Again, 147 total holdings. Now, looking at the dividend yield, again, 5.25%. You're getting an annual $1.72. Not too shabby out of a share price of $32.50. If we take a little bit deeper of a look here at the dividend yield, so you're seeing here this dividend yield history. Now, when you're talking about dividend growth for any type of international company, it's tough to analyze it from first glance as a US based investor because you have currency fluctuations that impact that. So even if a company is paying a steady dividend internationally, you could see a year of a essentially declining dividend simply due to the strength of the US dollar or currency fluctuations. So that's always a consideration. Now you see the yield over the past 10 years here. The average yield for 2025, 5.9%. You go back to 2023, 7%, 7% again in 2020, 5% in 2015. So you would certainly say that the yield has been trending upwards. Your yield on cost for the past 5 years, had you been investing in IDV, would be 7.3%. So 5 years of investing and your yield on cost, well, I should say you invest and then 5 years later, your yield on cost would be 7.3%. Certainly that would qualify as a high yield on cost. Your 10-year yield on cost, though, does tell a different story. Your 10-year yield on cost would be 4.8%. So anytime you see a declining yield on cost, that certainly tells a story about the strength of the underlying holdings over time. Dividend growth, like I mentioned, you've got currency fluctuations to consider here. So that's why you see the choppy nature of this dividend growth. If we look at the past 10 years, you see this bar chart is all over the place. So not only do you have the impact of potentially the underlying holdings changing in the ETF, the underlying holdings changing their payouts, currency fluctuations. So it's not always going to be a steady up and to the right dividend growth chart. Naturally, you're not going to necessarily have that with a high yield focused ETF, but certainly when you have an international focus, you're going to see choppy dividend performance. Let's move on to DTH from Wisdom Tree. Again, this is ex-US and Canada. We won't do the total returns. We'll do that when we pull up the chart and compare all three of these against VXUS and VU here in just a moment. Total holdings for DTH here, 586, so significantly more than we saw with IDV. Now, the top 10 holdings alone make up 21%. From a sector perspective, you'll see that financials are 28.25%, industrials 14, utilities 12.5. It is interesting to see the weighting of utilities in these international dividend, high yield dividend ETFs of 12.5%. IDV, what was IDV? Let's take a look at the utility weighting in IDV here. That was 15%. So such a stark difference compared to VTI or VU or SPY. But that being said, in DTH, you've got energy at 9.25%, materials at 7.5%. That's certainly a sector that is much higher weighted in these high yield international ETFs. A lot of mining companies. Communication 7.5%, consumer defensive 7.25%, consumer cyclical almost 6%, real estate almost 5%, healthcare 1.8%, and technology 1.3%. The top 10 individual holdings, you've got HSBC at 4.35%, Allianz at 2.14%, Intesa, certainly not familiar with Intesa, 2.1%, British American Tobacco, which was the top holding in IDV. But here in DTH, you've got British American Tobacco coming in at 2%, Shell 1.9%, Enel 1.9%, Total Energies 1.7%, NG 1.6%. Wow, that's a name. Banco Bilbao Wow, what is that? An Argentinian bank? What the heck is that? Banco Bilbao. That's got to be an Argentinian bank. Banco Bilbao Vizcaya Argenteria. That's awesome, actually. I like that. But 1.6%, and then Iberdrola at 1.6%. So again, top 10 holdings here in DTH, almost 21% of the weighting, 586 companies, so pretty well diversified. You saw the sector breakdown. Dividend yield here for DTH is, let's say, 4.5%. So a lower dividend yield than we saw with IDV from iShares here at 5.25. Looking at that dividend growth, again, the chart is all over the place. It's not consistent growth, but that's just what you kind of have to expect with a international high dividend ETF. Let's just look at the yield on cost for DTH here. You see the yield on cost for the past 5 years. So had you invested 5 years ago, today your yield on cost would be 6.55%. Over the, let's at a 10-year period, again, you see it dipping off at 4.3% yield on cost had you bought shares in DTH a decade ago. We'll wrap things up looking at VYMI, which is the International High Yield Dividend ETF from Vanguard. I think this is actually the newest of these three. I think it's only been around 5 or so years, but it does have the most assets under management at 10.2 billion. Actually, this Wisdom Tree DTH ETF was by far the lowest assets under management at 400 million. But back to VYMI, over the past year, up 9.4%. Over the past 5 years, almost 60%. And let's on this 10-year chart here, we see inception date of, let's just say end of February 2016. It came public at $53.25. Now trading for $76.20. Again, towards the very top of the 52-week range, expense ratio of just 0.17. So I believe this is the cheapest from a fee perspective of the three, a 0.17% expense ratio. I don't believe I covered this with the DTH from Wisdom Tree. This one is actually the most expensive of the three at a 0.58% expense ratio. So if your primary focus is exposure to international high yield and you want to minimize fees, well, then VYMI is a viable option for you. The cheapest of the three does yield 4.25% on that dividend, which is the lowest yield of the three. IDV is yielding 5.25% currently, DTH 4.5%, and VYMI at 4.25%. So just a couple things to consider depending on what your primary goals are. Now, with VYMI, you've got, in typical Vanguard fashion, you've got 1,627 companies in this ETF. Top 10 individual holdings, only 14% weighting of the entire ETF. So by far the most diversification, which maybe that's important to you. If you're not, investing in this, certainly I'm not very familiar with a lot of these companies. So maybe you want as large of a basket, if you will, as you can get. Well, then that would be another check in the box for VYMI. From a sector perspective, financials way out ahead at 40%. I believe they have a lot of European banks in there, and I believe European financials have actually performed incredibly well over the past year. I think they've even outperformed the US markets by a fairly substantial margin. But you see financials at 40%, energy at 9.2%, consumer defensive 8.3%, industrials 8.25%, consumer cyclical 7.5%, materials 6.3%, healthcare 5.7%, utilities 5.3%, by far the lowest weighting for utilities of these three. Communication at 4.7%, technology, this is the highest weighting for technology of the three at 3.2%, and then real estate at 1.6%. For the individual companies in the top 10, number one is Nestle, which I think I've actually done a video on Nestle. They have a ton of brands that you would certainly recognize. You've got Roche in the number two spot, Roche Holding Company, 1.6%. Shell at 1.6%. Novartis. Which of the GLP-1 weight loss injection or drugs do they do? I forget. I can't remember if they make Ozempic, but Novartis at 1.56%, Toyota 1.5%, HSBC, there's your large European financial, 1.44%, Commonwealth Bank of Australia 1.1%, Royal Bank of Canada 1.1%, Mitsubishi 1%, and Allianz 1%. So you see some of the large financials there, which explains the 40% weighting in financials. Again, 4.25% on the dividend yield for VYMI, annual distribution of $3.27. It actually has a little bit of a track record of dividend growth going back to 2022, was paying $2.80, now up to $3.29. You see that it has the least amount of history since it only came public as a product anyway, since 2016. So let's go ahead and take a quick look at some yield on cost here. We'll click into the dividends and that dividend yield. So our 5-year yield on cost is, let's see, about let's say 4.3%. 10-year we can't really do because it hasn't been around for 10 years, but your 10-year, well, let's say 8-year yield on cost would be 4.25%. You see that yield on cost is actually trending up though over the last 5 years, and over the past 10 years, slightly positive. So 6.1% had you purchased shares of VYMI at the end of February in 2016. Now, pulling up a chart of the 3 high-yield international dividend ETFs that we looked at, comparing them to VXUS, which is the total international ETF from Vanguard, and VU, which is the S&P 500 ETF from Vanguard, we see over the past year, this is actually interesting. Now, we're looking at total return, so certainly a key component of our 3 ETFs that we focused on today is that dividend yield. That's likely why you're investing in them. Otherwise, I don't know why you would. IDV is the top performer by far at 21%, followed by DTH at 17%, VYMI at 15.5%, VXUS at 10.5%, and VU, the S&P 500, up 9.5%. So actually, high-yielding international ETFs are spanking the S&P 500 over the past year. Over the past 3 years, we see a fairly significant change. The S&P 500 at 48.5%. But interestingly, we see VYMI now the top international high-yield ETF, the top performer of those 3 at nearly 43%, followed by DTH at 42% over the past 3 years. And then IDV, which was our top performer over the past year, is bringing up the caboose at almost 36%, but still outperforming VXUS, which is the total international ETF. Over the past 5 years, VYMI, the top performer, up 100%, followed by DTH, up 88.5%, and then IDV, again, third place over the past 5 years, up 86%. But you'll notice the separation growing between these high-yielding international ETFs and the total international ETF. So VXUS here at 69%, starting to significantly lag the higher-yielding international ETFs. And then if we look at the past decade, I mean, the separation between VYMI and VXUS is significant. You've got VYMI, which doesn't even get the full 10 years of performance because they came available in 2016, but up 108% compared to 62% for VXUS. So it might be something, I mean, this really did surprise me. Certainly I'm aware of the fact that American markets have outperformed international, but it was very, very interesting to see a high dividend yield focused international ETF outperform the total international to such a significant degree. Even the other 2 that haven't performed nearly as well. IDV has slightly outperformed VXUS over the past decade, and DTH is the worst performer at just up 53% total return over the past decade. So really the yield is the only thing keeping you alive there. But yeah, I just thought this was interesting. I wouldn't have guessed this. I mean, I knew VU would be the top performer. I would have guessed VXUS would have outperformed all 3 from a total return perspective. So thought I would share. I hope you enjoyed it. Hope you got something from it. If you did, please give me a like, give me a subscribe, or don't, whatever. But thank you for watching. Take care. Bye-bye.